investors are no stranger to boom and bust cycles, but the recent Bitcoin crash has raised many questions about cryptocurrency's future as a whole. The most popular cryptocurrency, Bitcoin, fell below the 18,000 mark for the first time since November of 2020, in what many are calling one of the greatest crypto crashes of all time. Bitcoin losing more than 70% of its value since reaching its peak at around $68,000 has raised concerns amongst investors about crypto as a viable investment option. And it's not just Bitcoin, since many other popular coins such as Ethereum have taken a massive hit as well, also losing more than 50% of their value. However, in 2022, crypto is more than just an investment opportunity to grow your wealth at exponential rates, as the technology is tied to many other ventures, like Metaverse. Any discussion about crypto's future is incomplete without considering its impact on these emerging technologies. Will Bitcoin's fall affect the Metaverse? Keep watching this video to find out. Welcome to Invested Knowledge, where knowledge is power. So make sure to subscribe to this channel for up-to-date essential knowledge to become more successful in life and in business. Crypto cash. The cryptocurrency market has been in tatters for the past few weeks. The crash has worsened because of massive losses sustained by popular currencies like Bitcoin and Ethereum, which are also now touching historically low prices. Once having a market value of $3 trillion, the cryptocurrency assets have fallen below $1 trillion, totaling at $840 billion as of the 19th of June 2022. Crypto companies like Coinbase have also been wrecked by the recent market crash. The CEO and co-founder of Coinbase, Brian Armstrong, announced that the company has laid off about 18% of its workforce. Other similar companies such as Global Inc., Gemini, and BlockFi have also warned about laying off thousands of employees if the current market trends continue. The question, however, remains, what has caused this sudden downturn for the industry? Bitcoin has always been a highly volatile asset, seeing staggering rise and decline in prices and durations as short as 24 hours. This is because, unlike traditional investments, Bitcoin isn't backed by a company's profitability or the asset's inherent value. Crypto coins are priced based solely on speculation. However, a dissipation of more than $2 trillion in market value in such a short duration of time is still an anomaly. There are some explanations to make sense of what's going on in the crypto space. Crypto, like every other market space, is vulnerable to the economic and political environment. Currently, the world is facing three major economic shocks: the war in Ukraine, inflationary fears due to global supply chain problems, and high interest rates, which have made borrowing expensive for businesses. Experts believe that these factors have spilled over into the cryptocurrency market, causing this latest slump. This decline has made some online cryptocurrency exchanges take extreme measures, like suspending withdrawals to stop the plummeting prices. But that's not where it ends. Since the technology behind crypto has become greater than itself, and it has given birth to numerous new ventures like Metaverse and NFTs. For the folks invested in these emerging technologies, the concern is, how will this crypto crash impact the future of these new ventures? But first, let's take a look at how Metaverse and Bitcoin are related to each other. How is Bitcoin related to Metaverse? Although tech aficionados might already be familiar with Metaverse, the term became part of most people's consciousness when the renowned multi-billionaire and Facebook owner Mark Zuckerberg renamed his company from Facebook to Meta in an attempt to rebrand itself and lay the foundation for the company's shift to what Zuckerberg thinks is the next digital frontier, the Metaverse. So what exactly is Metaverse? Although the novelty and incompletion of the concept makes it difficult to correctly define it, the broader idea behind the technology is that it is the next iteration in the realm of internet, in which it will become a single, universal, and immersive world that is facilitated by the use of virtual reality or VR and augmented reality or AR headsets. Metaverse is supposed to be a new and more experiential way of interacting with existing technology. But how does all this relate to Bitcoin or cryptocurrency in general? Any digital immersive world must come with its own form of digital economy, and any economy is characterized by the idea of scarcity and ownership. This is where cryptocurrency comes in. Since the Web 3.0 is defined by decentralization, cryptocurrency provides an independent way to conduct payments without any interference from banks or the government. The motivation to build a virtual world comes from the fact that it has a lot less friction than in the real world, since it doesn't require complicated and expensive infrastructures. If you want to go somewhere, you can just click on, for example, a map, and you can transport to that location instantly. That virtual teleportation doesn't require costly transport infrastructure or complicated logistics like banks and regulators as intermediaries for the process to run smoothly and reliably. Cryptocurrency serves to eliminate the need for such intermediaries using its blockchain technology, which only requires software running on standard computers. As most of us spend a greater chunk of our lives online, there will be a growing demand for payment systems for purchase of virtual goods. There are already startups like Decentraland that aim to serve as a platform for buying and selling of virtual real estate. Although there might be some disagreements over the quality of purchasing real estate in the virtual world, there are some use cases of Metaverse that most, if not all of us, can get behind. Since Metaverse is basically about creating a virtual twin of yourself and mimicking the real world in a digital setting, you can, for instance, try on new clothes in a virtual world before buying them in the physical world. Construction or manufacturing can be tested out by first making a cost-effective and almost identical model in the virtual space before the actual project gets the green light. If the technology is perfected to a certain extent, we can even interact with our friends like they're physically present in front of us. The possibilities are endless with this technology. Although seamless transactions is a one-way cryptocurrency related with the metaverse, that's not the only way these two ideas are intertwined. Both metaverse and crypto share their underlying technology, which is a blockchain. As mentioned before, the digital economy is characterized by item ownership, and blockchain technology ensures that item ownership is guaranteed using a non-fungible token or NFT, which could take the form of digital art or a digital version of a real-world purchase like a pair of Adidas, which could then be worn in the metaverse. Therefore, the recent crypto crash raises the question, how will the fall of Bitcoin impact the metaverse? So, how does the fall of Bitcoin affect the metaverse? Historically speaking, whenever the cryptocurrency market goes through a slump, coins related to blockchain-based solutions, ventures like Mana, Sandbox, and Decentraland also come down in price. Similar trends are observed following a recent crypto crash as NFT transaction activity went from 3.9 billion to 964 million during May of 2022. NFT is the key technology behind virtual asset ownership like digital art and virtual real estate. So there have been quite a bit of debate about whether the crypto crash will have any impact on the metaverse. Crypto is highly susceptible to speculation. Therefore, any side on the issue taken by experts is reliant on mere guesses. The verdict on this pressing question has the community divided. Some argue that crypto is related to the metaverse insofar as it provides a decentralized mode of payment. The technology already exists, so the prices of random coins should not have any impact on the metaverse's future. However, the opposing view is that a volatile currency, vulnerable to speculation, not backed by either inherent value, like gold, or a sovereign's guarantee, like fiat currency, is going to make payments in the metaverse space complicated. Furthermore, as investors pull out their money from these crypto-related ventures, resulting in mass layoffs and declining funding, might mean that development of these emerging technologies will stagnate and never reach that mass market. The volatility of crypto was always a challenge that the metaverse would have to address at some point, and the recent slump has taken away the marginal stability offered by reliable coins like Bitcoin and Ethereum. The future of metaverse will now be dependent on whether it's able to weather the storm and come out with a solid solution addressing the vulnerabilities of this novel technology in order to regain the trust of the investors. That's all for today's video. Thank you for watching. I hope all the shared information will be helpful for all of you. And if you have any questions or doubts, please leave it in the comments section. Don't forget to like and turn the notification bell on for more informative content.